Okay, cool guys. Now we've reached the most important segment of this lesson, which is risk management. So regardless of whatever it is that I taught you in the past, regardless of what it is that you know now, I'm telling you today, if you do not follow through with this lesson here, that's where the danger is. That's where you will find yourself not being profitable or not being consistent in the forex trading market. So risk management is very important. This is the most important segment I'm actually talking about now. Okay, let's jump straight into it. Okay, first of all, risk management. You know what you want in the forex market. You know how much you can afford to trade. You know what you're willing to risk. Like I said before, never borrow money for trading. All these other funny things like never trade with money that you're not willing to lose and stuff like that. You understand? Once you've had that amount in your account, let's say you have 100, you have 10,000, you have 1,000, whatever amount you have in your account, there's one thing you need to know. You need to know there's a strategy that I know, or there are trading concepts that I understand, and using these trading concepts, I need to trade a certain number of times before I become profitable, before you become profitable. This is what you have to tell yourself. So in this moment, you have $100 and you tell yourself that in this $100, I'm going to trade 10 times. So what am I risking? You are risking $10 in each trade in order for you to accommodate 10 trades. You understand? You want to trade 100 times, you need to risk $1 on each trade. You understand? It comes to calculating risk. And then after you've calculated that risk, you need to have a growth plan. You understand? You have to calculate the risk, calculate the risk to reward ratio. Know that after the money that I've been making from my trades, I need to find a way to actually expand and actually improve my ways of expanding my income. So this here is a growth strategy that comes after you've understood this, the calculation of risk. So you're gonna talk about this one because this is the most important part. Because now you're gonna be risking $10 in one trade. You don't know how many lot sizes you need in order to trade or to take that trade. So per trade, you already need to know, okay, now I'm going to calculate, okay, stop loss, my entry needs to be such and such, you understand? So in this risk calculation, we're going to be talking about that. So let's first jump into that important segment and then come back to talk about growth, discuss a growth strategy that I'm going to give you. Okay, cool. Now we are going to talk about calculating position size and risk management. Basically what you're looking at now is a more complicated way of calculating your risk. I'm not really going to teach you how to do this. I'm just putting it out there for the people who are most interested in complicated calculations like this. Or if you want to practice this on your own, basically try to figure it out on your own, because I'm not going to be teaching you this. I'm going to be teaching you something much simpler than this. This method is much slower. You might miss trades or get inaccurate calculation. Basically calculating risk, these days it's easy. They used this back in the days where there was no internet. Now we have internet. You can simply go to a broker platform, place your trade, and the broker is going to calculate this for you. Or you can find management tools that can actually help you calculate entries when you trade. But I don't really use those management tools, so I don't really have much experience with those management tools. You can basically go out there and do your own research and find these tools, and they'll actually help you to calculate, to know how many lots you need to enter a trade, or how much you need, or how much you're going to lose rather on a specific trade. So what I'm going to show you is just a simple calculation using one of the websites that are readily available for us. But first, let me wrap this off this board and basically show you the basics before we jump on to the website. Okay, cool. First thing you need to understand when calculating risk is the difference between the basic digit quotation and the JPY digit quotations. So the basic digit quotations, they have 4 digits after the comma. You'll go to some MetaTrader platforms or some other trading platforms, and you'll see that maybe there's an extra digit there at the end. You understand? So this here would be your pip. This would be your pip, PIP, and this will be your point. You understand? But we don't do these calculations based on points because the platform we're going to be using require us to put in pips instead of points. You understand? So for basic quotations, you'll have 4 digits, and this here will be your pip. And then For JPY digit quoted currency, you have 2 digits after the comma, where this will be your pip, and maybe you might get an extra number depending on the platform, and that extra number will be your point. You understand? So I hope you get the difference. But we're not going to be working with points, so we can basically delete them from this equation because we are not going to be needing them. So now that you understand the basic between a pip and a point, and a JPY quoted currency and a USD or basic currency or basic digit quotation, let's move on to oh yeah, before I forget, this is how it would look like. A JPY quoted currency would look something like this. You understand? So it will be your GBP, JPY, USD, JPY, and so on and so on. As long as it's quoted with a JPY. Doesn't matter which one is this side, as long as this side is JPY. So it will look something like this. It will be 3 digits, then a comma, and then it will be 2 digits or 3 digits, depending on the platform. Same example as a basic digit quotation. It will look like something like this. One digit, then a comma, and then there are 4 digits after the comma, plus a point, depending on the platform. You understand? But now we need to be working with pips. So now I'm going to show you how to basically calculate pips. So yeah, guys, let's jump straight into that one. Okay, cool. Calculating your pips is a very simple process, guys. The only thing you need to do is to basically subtract your entry to your exit. You understand? So sometimes you get confused with this and find that you have a negative number. The way to remember this is always subtract the small number from the big number. So we're always subtracting the smaller one from the bigger one to get our pip value. So understandably, as we already explained the whole process, we're going to make an example of Euro USD on the basic quotation. We're going to make an example of USD JPY on the JPY quotation. So what we spoke about, we talked about that the pip is the 4th digit after the comma. That's the pip. So in your MetaTrader platform, you'll always see the last number, depending on the platform that you are actually trading on. You'll see this 5th number. We ignore this number. Even here, there's this number. We ignore this number. You understand? So now what do we have? We have something like this. So we subtract the bigger number from the smaller number. You understand? So it doesn't matter if your entry is bigger than your stop loss, or your stop loss is bigger than your entry, the digits are bigger. Just take the big number and then subtract the small number from that big number. You understand? Then you get your value like this. Then when your value like this last number is your value, is your pip here. So you have how many things are in this, how many pips in this calculation? You have 8 pips. Same thing when you are trading what's this thing, JPY quoted currencies. Same thing, you get 3 digits before the comma, and then it's this, and then the second one is your pip. The third one is your point. So we're not working with points, so we ignore that one. You understand? Same thing, we ignore that one. We're only working with pips. Calculate this thing, put it in your calculator. Same thing, you subtract a small number from a big number. You understand? So how much do you get? You get this digit. So the last number here is going to be your pips, which is 7 pips. You understand? So now what you do when you find these pip values, you take them, you transfer them to the website called Baby Pips. Baby Pips, Baby Pips, Baby Pips. Okay, cool. The first thing you need to do is to go on to Google, and on the Google search bar, just type okay, cool, we already have it here. Just type babypips.com calculator. You understand? And then just click there and search. This is what is going to show up. This is not what is supposed to be showing up. Okay, cool. This is what you need to look for. Look for this this URL that says babypips/tools position size, etc. Or you can just type in the website, and then on the website you'll go to tools and click on calculator. But it's much easier going on to Google and just looking for the position size calculator. Okay, cool. Then it's going to redirect you to the calculator. If you're using PC, just scroll down. On the phone, it's just going to show up as it is. So let's assume our currency, all we have to do is just fill this, and the results will show up this side. So let's just assume that our currency is USD and our balance risk, let's say you want to risk 10%. I like to risk 10% of my account balance because it actually doubles my account much quicker. And the reason is that because I already did all the practice and actually calculated how much my strategy is actually going to win me after 10 trades. So 10% is fine with me. So stop loss in pips is what we just calculated. So let's assume that we're going to trade the Euro USD like we calculated before. Let's say our pips are 8 pips. Currency pair that we're going to trade is Euro USD. And then we scroll down and wait, let me remove this here. Good. And then we scroll down and click on calculate. So after we click on calculate, it's going to show up here. On the phone, it's going to show up at the bottom here. So you need to scroll down if you're using a phone. So as you can see here, it's telling you the amount that's at risk. So if I'm taking this one trade, I'm risking 10 USD on this one trade. The position size is 12,500 units or 12,500 units of the position. Not very important, it's not what we're looking for. The main thing we're looking for is this. How many lots should we be using? How many lots should we be trading with? How many lots should we be plugging into a MetaTrader platform or our trading platform? So right here it tells us if we're using a standard account, standard lots, we're going to trade with 0.0125. If we're using a mini lots account, we're going to be trading with 1.25 lots. If we're trading with a micro lot account, we're going to be trading with 12.5 lots. You understand? So it's the same procedure. When you're looking for your take profit, you just do the same thing. You just subtract your entry from your TP and then take those pips and come and put them here, and it's going to show you exactly how much you are going to make. But it's going to say amount at risk. But just know that when I know personally that it's not an amount that's at risk, it's amount that you actually stand to lose, because this only calculates our risk, but you can use it the same way to calculate your take profit. So I hope that made sense, guys. This is just simple, just like that. That's you calculating your risk and you are done, dusted. So yeah, guys, I already taught you how to place a risk on the beginner's trade, how to actually place your stop losses and stuff like that. So this is just adding to what I've already taught you. So yeah, that's it for risk calculation. If you do want to use other calculators, you can just go to your app store and just download Forex trading calculators and just try a way to figure out how to use it. Now, when you are trading gold, before I forget, when you are trading gold, because I also trade gold, you calculate them the same way, né? With gold, you calculate them the same way. The only difference with gold is that your answer you will multiply by 10. That's it. When you are calculating gold, you want to know how much you are risking on gold, just calculate normally, subtract what you need to subtract, and then your answer you multiply it by 10. And then the first digits that are before the comma will be your pips. Oh yeah, that's it, guys, for this lesson. I hope you enjoyed and understood it. If you don't understand, just ask me questions. Okay, cool. Now we'll talk about the growth plan. Now, this plan is actually going to fast track your growth in the Forex market. People who do not take this lesson are actually going to, number one, take time to grow in the Forex market. And number two, it's when they do start to grow, it's going to be very difficult to actually grow in a rapid rate, you understand? So this is why it's important to understand the growth plan when you're starting to make some money in the Forex market. So after trading demo, after you've practiced your trading, and now you see yourself as a profitable trader, you actually do your initial account. You create your initial account and deposit in it. You start trading that account. You make profits from that account. The profits that you make from that account, you now withdraw. You understand? And not the profits. Sorry, you don't withdraw the profits. You withdraw the initial deposit. You understand? So whatever amount you did withdraw in that account, you withdraw that amount. And the reason for withdrawing that amount is so that you start trading without any risk in the market. So what are you going to do with the amount that you just withdrawn? You want to take that account, you want to create a second account, which is going to be your fundamental trading account. I understand that I have not taught you how to trade fundamentals yet, but I myself trade fundamentals, so I created a fundamental trading account. So every time there's trading news, I just go to that account and I trade and I double that account. So if you do not have a fundamental trading account, you can skip this step because you have not learned it, obviously. and go exactly to your expansion account. So what's your expansion account? The expansion account is the account that's going to create accounts that you will start withdrawing from and start spending on. You understand? Because at the end of the day, you're not just trading to profit and just trading to profit. You are trading to withdraw again. You understand? But you still need to have money to get back in the market. So here, the initial deposit, after you've made profits from it or double it or triple it, whatever you need to do to get the opportunity to withdraw, you take that initial deposit. You create a first account, which is going to be your what? It's going to be your day-to-day expenses account. So this account you're going to be trading in is an account that you're always going to trade. Maybe you want to take scalp trades, swing trades, you don't know. But this account is the account that you know that whenever I need something, I take out from that account, I withdraw. Whenever I need something, take out from that account and draw. That's your maybe clothes, anything. If you want to go out partying, you want to host an event, you want to take your girlfriend out, you want to buy certain things for yourself, this is the account that you're going to be using. You understand? I hope we're still on the same page. And the second account is the fundamental expenses account. Now, when I'm talking about fundamentals, I'm not talking about trading anymore. I'm talking about things that are fundamental to you. You understand? So let's say you have to pay rent. These are things that are much more expensive, like rent, car payments, whatever it is that you need to pay, like on a quarterly basis or monthly basis. Then this is the account that you'll be withdrawing from. Maybe you want to pay back a loan and so on. And then the third account is your investment account or your asset account. So this account you are growing. You are not withdrawing. You are just growing this account. Growing until you are able, maybe let's say you want to buy a certain asset. Excuse me. Let's say maybe you want to buy a car. And you want to use this car for transport because you want to transport children. You want to create a business from this car. You want with this car. You understand? So you withdraw from this account. Let's say you want to buy property. You want to buy property that you going to rent out to other people, and this property is going to bring in additional passive income to you. Now, what's happening in this account is that every time you withdraw from this account to buy whatever asset you want to buy, that asset the money that's generated from that asset is going to be used to pay this account back. So instead of going to the bank and asking for a loan, you have an investment account that you can actually borrow from. So you're basically borrowing from yourself and paying yourself without any interest. You understand? Paying yourself back without any interest. So anything that you withdraw from this account must go into a business venture or something that's going to bring back the money that's going to pay this account back. Because now in this account, you're going to pay this money back. Once this money has been paid back, you can use that asset to buy future luxuries and stuff like that. So this is what you will be using to buy big things or to make huge investments. Okay, cool guys. That's it. This is just a basic idea on how you can actually grow yourself as an individual through the Forex market. I know some people will see this as an illusion, or some people will see this as a big task to actually accomplish. But remember guys, baby steps. When you're starting out, set these goals, try to get through all 6 of these levels. It's not going to be easy, but try to get through all 6 of these levels, and you'll see by the time you get to this level, you'll be in a different planet. It could take you maybe 2 or 3 years, depending on how you apply yourself. So I think this is going to help in the long run. So yeah guys, that's it for this lesson. Have a great day. Goodbye.